Hey guys, welcome back to a brand new video. I'm RexFinance, and wow, do I even need to say anything? What a phenomenal day in the stock market. Today we had Apple up over 2%, we had Coca-Cola up over 2%, we had Google green on the day, the S&P 500 along with the Dow Jones Industrial Average were all green, and Amazon was even green today. What a terrific day in the stock market. Congratulations to everybody for the gains. Now, for those of you that may not be able to tell, obviously I am being satirical. What I just said to start out this video is a common headline that we have seen for the past couple of weeks. Today, it's going to be even worse, where all of the market indices are up, all of the large cap stocks are up, yet what our watch lists and portfolios are looking like is something like this. Literally bleeding red, where we have great companies down over 5%. Tesla on the day, down over 2%. That's a pretty big move for Tesla nowadays. Palantir down 4%, Snowflake down 4.5%, CleanSpark down 5%, Gevo down 5%, Tattooed Chef down 5%, Coinbase down 5.5%, Lightning eMotors down 6%, Enphase Energy down 7%, STEM down 7.5%, Beam Global, which is a solar panel company, down almost 8% on the day. So despite all of these annoying headlines that we've seen over the past couple weeks, and even today especially, all of our watch lists, all of our portfolios are deep red. What commonly happens in this scenario for investors is they start getting upset, they get depressed, they start getting FOMO, fear of missing out, and they start questioning themselves. What am I doing wrong? These headlines are telling me that the markets are at all-time highs. They're doing the best they've ever done in history, yet my portfolio is down 4 or 5% on a daily basis. Then on top of that, a lot of retail investors are on platforms like StockTwits and Twitter constantly tracking the stocks they own. And what are we seeing on those platforms currently? We're seeing people saying, oh, this stock hasn't even dipped yet. Just get ready for what you're about to see. For example, with CleanSpark today, this stock is down 5% today, down almost 70% from its highs. I see on StockTwits and Twitter people saying CleanSpark, oh, the big dip hasn't even came yet. Get ready for $7 a share. This can be even more demoralizing than the headlines we're seeing on a daily basis about the markets performing so well while our portfolios stink. What this causes is even more fear of missing out and more questioning, what am I doing wrong? Everybody seems to know what's going to happen. I've seen people on all of these platforms saying that these dips are just the beginning of what they're going to become. And so far they've been right about everything and I have been wrong about everything, literally everything. What am I doing wrong? So we get depression, we get upset, we get FOMO, and we start questioning our own investment philosophies in companies that we have high conviction and belief in. Now, from my vantage point, whenever something like this happens, what I see is people starting to sell out of their stocks, which is exactly what I'm going to talk about today. Before we get into this, I want to say thank you to Howard and Miguel for recently subscribing to the YouTube channel. And I want to say thank you to Rick and Scott for recently signing up for the new Patreon. If you guys have had issues joining the official YouTube membership, there's now a second way you can join the Rex Nation membership, and that's through Patreon. You get the exact same benefits. So if you've had issues in the past, try checking out the Patreon. There'll be a link in a pinned comment down below. Anyways, let's start discussing this. I've had people that I know personally ask for my opinion on them selling out of their stocks in this environment. I've had the same thing happen with just people that watch my YouTube channel. And I've also seen this with people that don't watch my YouTube channel and don't know me personally. I see this on Twitter and StockTwits. People gauging people's opinions on whether or not they should sell out of their stocks because of a big crash that's coming, a big dip that's going to happen in these small cap growth stocks that a lot of retail investors are invested in currently. Now, the first point that I want to make in this video is a rather important point, and it's something that everybody has to realize if they want to have investing success. A stock is not always representative of what a company currently is or what they're going to be in the future. What I mean by this is Enphase Energy today, down 7%. This stock should not be down 7%. The valuation on an Enphase Energy right now is almost getting into free money territory, dare I say it. where if this company develops into the company that they are projecting and shareholders believe they'll become, it's free money buying in at these prices. There hasn't been any earth-shattering news that has told us that Enphase Energy is not going to continue to exponentially grow as a company, yet the share price is down 7%. Does that mean that the company is 7% worse? No, it doesn't at all. In fact, Enphase, I would argue, is improving and growing on a daily basis, but the share price isn't always improving and growing on a daily basis. I know this example is probably overused, but it's overused for a good reason in my opinion. Let's look at Tesla stock. Tesla stock, for basically 2.5 years, from 2017 until 2019, was actually producing investors negative return. There was short report after short report coming out about Tesla. There was bankruptcy FUD, other types of FUD that didn't involve bankruptcy. People were bashing Tesla. But the people that kept their high conviction in the company and believed in their own bullish thesis about the company have been rewarded tremendously over the past 12 months. Another example that isn't used quite as often is Amazon stock. Amazon, how many times did Amazon go way up because of the tech bubble, just to crash back down, just to slightly recover, to go back down again, to go back up, to go back down, before it really started seeing these exponential gains? I'll tell you the answer. It took many, many years for Amazon stock to fully begin to price in what the business was becoming. So you may be wondering, what is your point here, Rex? Well, my point is that most of these stocks that are down 3, 4, 5, 6, 7+% today are great companies with terrific financials and terrific growth rates inside the company. Most of these companies have dang good growth, and all of them have tremendous growth potential. Lots of these valuations, I already mentioned Enphase Energy, are entering free money territory on this dip, where if these companies truly become what we believe they're going to become, it's inevitable that shareholders are going to make a lot of money on these investments. But the thing is, in order to make tremendous return on your investment in these companies, you have to have patience. The only investors that truly make tremendous return in these stocks are the ones that have patience and remain highly convicted and keep high belief in these companies. This is where most retail investors go wrong. They lose patience, so they sell out of their stocks and either never come back to the stock market ever again because they sold at a loss, or they choose to go heavily into short-term call options to help compensate for the loss in the share prices that they have experienced. However, 9 times out of 10, whenever somebody goes heavily into short-term call options, they end up wrecking their portfolio even further. Investing and making a lot of money truly takes a lot of time. One of my favorite quotes ever is that the stock market is a device for transferring money from the impatient to the patient investors. What the impatient investors don't realize is that on the other side of all of these transactions, there's a patient buyer. For every impatient seller, normally there is a patient buyer on the other end of that transaction buying their shares that's willing to wait this out and end up making a lot of money. So if you still haven't gotten it, my point is that a change in the share price should not be changing your belief about where a company is headed and where it is going. That is how the bulk of investors miss out on so much money. How many times have you heard somebody say, oh, I bought Tesla in 2017, 2018, but I sold it in 2019 because I got impatient and I missed out on all these gains? Countless times this has happened. For me personally, I've heard that. Also, if you guys did not know, I can see my analytics and I can see my demographics. The bulk of my viewers on YouTube are either in their 20s or their low 30s. Why are you in a hurry to make money right now? Ask yourself that. You probably don't have plans to retire until you're 60 plus years old. So why are you chasing a big return right now when we know that time is always working on our side with these speculative investments if they are good companies? It's been proven time and time again that the people that want to get rich quick aren't the ones that actually get rich quick. It's the people that remain highly convicted and keep high belief in their investments that end up getting rich quick, because a change in share price doesn't make them sell out of a good investment. My last point that I want to make in this video is that a market is unfortunately a market. That sounds very silly when I say it, but let me explain to you what I mean. With any market ever, there are ups and downs, there are bearish and bullish trends, there are cycles, Sometimes the sectors you're in are in favor, sometimes they're not. A quick example of this is looking at the energy sector within the stock market. For the last 3 years, the energy sector, which is the green, has had the worst performance out of any sector. However, so far in 2021, the energy sector, as you can see above my head, is the top performing sector in the entire stock market by a mile. So for 3 years in a row, energy stocks, energy companies were not in favor by any means. Lots of people lost a lot of money. But because markets always have cycles, bullish and bearish trends, etc., energy stocks have rebounded this year, and they're the top performing stock sector by a mile in 2021 thus far. So the point I want to make is that beating the markets, which should be everybody's goal that's doing individual stock picking, it involves pain. And it involves pain because to beat the markets, you have to beat the markets to the bearish trends, the bearish sectors before the big money gets there. That can be a painstaking experience. People that were investing in energy stocks and beat the big money back to the sector are up probably over 50% this year on their energy stocks. But that didn't come without pain. A lot of those same people were buying these stocks when they weren't in favor, when nobody wanted them. That's part of the reason that the greed and fear index works so well. When people are in fear, you should be greedy and be buying whatever stocks people are in fear about, if it's a good company. The reason for this is because the markets again have these cycles, and every single time, if money is flowing out of a sector or an industry or an asset class for a prolonged amount of time, eventually that sector, industry, or asset class catches back up, because what does money do? Money always looks for the best opportunities. Looking at the energy sector in the stock market, clearly that was the best opportunity with how beat down those stocks were. And the people that capitalized on this and realized it, they're doing very, very well. The people that didn't have patience, didn't have high conviction, and didn't have belief have lost out on a lot of money despite being in the correct sector going into 2021. So right now, as we look at what types of stocks are in favor versus out of favor, we can look at forward PE valuations. With large cap stocks, they're a ripoff. They haven't had a forward PE ratio that averaged this high since literally the tech bubble, before I was born. That is crazy to think about. And this has just gotten worse as days have gone by, because again, what have we seen? What have the headlines been? The S&P 500, the Dow Jones setting record high after record high. But all of our portfolios have been red or been hurting pretty badly. Mid-cap companies, on the other hand, their valuations have come down back to reasonable levels. And you can find good deals in mid-cap companies right now. But if we look at small cap companies in particular, and these are companies that are valued between $300 million and $2 billion, the valuations on small caps right now, this is where you can find the bulk of the deals in the stock market. And if you look at a lot of the stocks that have been down recently, they fit into either the small cap or the mid cap categories. So right now, mid cap and small cap growth companies in particular are out of favor with the markets. But the way you can make money is by being patient, keeping your belief, and staying highly convicted in these companies, and ultimately buying more shares of these companies that you love and believe in at a discount. It's kind of like going to the candy store and buying your favorite candy bar for $5 one day, and then you go in there the next time, and that same candy bar you can buy for $2. You're going to be ecstatic. So if you thought that the stocks you bought were at a good price when you originally bought them, you would think that a lot of those stocks are at tremendous deals. You can go shopping at a discount. It's like having a special coupon code. But anyways, I hope this video helps calm some of your nerves. The stock market does not always favor what you're invested in. That's just the way it is. But the way you can outperform the markets is by beating big money to the bearish trends and the stocks that have been beaten down. On top of this, if you keep the faith, have patience, stay believing, and have high conviction in the companies you own, nobody can stop you. Not even the share price can, because the share price is not always indicative of how the company is performing. With that, guys, I hope you really enjoyed this video. Please hit that like button down below if you enjoyed this. If you guys are new here or returning and not yet subscribed, hit that subscribe button down below. And I'll be back with a brand new video on Friday. Peace out.